position update for my TQQQ that I've alerted you guys to be adding at February 24th. That was back here last Friday, and I alerted you guys, everyone, to add a initial position at 21.67. But I ended up adding a full position because I was looking at the price action of TQQ. I was looking at QQQ. This is the 30-minute chart, and you guys can see here on my account, I initially added 1,000 shares. That's my initial position at 21.67, around 11. And when I was looking at the price action, it started to give me a feel that I'm catching the weekly higher low, where the most likely scenario for the market would be, here's the weekly chart. So essentially, bulls are still in a weekly uptrend here. So the most likely scenario of this pulling back and becoming a weekly higher low setting here should be the most likely scenario. But of course, as with all price actions, there's no guarantees. So what I wanted to do was buy a full position there and set a stop loss below that Friday's low. So that would be this area right here, that orange looking line. And essentially, one mistake that I made is that the next morning we bounced to 22.8. So my 8,000 share position would have been up from a 21.57, would have been up roughly $10,000 within an hour, because the market closes here and this is the pre-market, and literally this market just opens and we're at 22.8. And essentially I did not take profit there because I was looking for this move, this kind of move, when the weekly higher low is set. So I was a little bit early, and we ended up chopping around for a lot of days and within this top resistance and support range. And I told, when we break this double bottom support, I was saying if we do have bear follow through that day, I would likely sell my position and stop out. I did not set a hard stop loss here because I usually gauge depending on what kind of action it is. So if I do see the bears had a very strong pre-market, but right at the open, there was zero bears. Literally, bulls just took over, and the rest is history. So we retested this double bottom support, becoming resistance here. And essentially, the bears tried to hold it down for the first try. So they brought it price back down. We can see how weak the bears are bringing the price back down. So if the bears are really strong, they would have been able to bring the price back down below the low of the day. If this happened, I would have just sold my position for a small loss and go short. But no bear volume came in, and we only retraced roughly 30 to 40% here of this move up, and bulls retested again. And right when this level broke, all the bears knew that is over, because they had their chance. Like, this is the psychology of it. It's like bears had a huge move, and the most likely scenario is we make a smaller bounce and drop. So bears had all their chances they had in the morning, and they didn't take it. And so right when this level broke, all the bears who put their stop loss amount at this level got stopped out. And when you're shorting, you get stopped out, it means that you'll be buying your shorts back. So you get a huge spike in shorts covering, as well as bulls buying back in as well when they see that we're back above this level. So we got a huge quick spike within like an hour or two into the market closing, and essentially it just continued, because which direction would we be going when we literally just had the bears giving them all the chances down here, and they didn't take it. So essentially the most likely scenario would be a full bull move the next day, which is exactly what we got. I'm going to go to the 15-minute time frame. I explained yesterday that essentially bulls did not I mean, bulls had full control, and bears cannot do anything with it, because you can see this teal looking line is a 12 EMA, and essentially bulls just followed it. You can see we bounced here once, 2, 3, 4, 5, and right at the close we tested again 6, and all the bulls had to do was put a stop loss under the 12 EMA and ride their profit out all the way. This is essentially what I did. I rode my profit all the way from last Friday, and I just held my position all the way till close around this area, and I decided to take profit because it's Friday and I had really good gains, and I was thinking, should I hold it for the gap up Monday and then sell it at open? Because usually when we have this kind of a strong move where we shot straight up and closed around the high of the day, there's a very good chance we get a gap up the next day from futures. But as with everything, I still had to take my profits. So essentially I took a profit at 23.38. So that's roughly from 5.7, it would be 1.8-ish dollars times by 8,000. That would be a 8,000 times 14,500, 14,600 dollar gains. So I took profit there, and I got all out, and I'm still holding a little bit of my other account. Essentially what I'm looking at Monday though now is that we have been extended, because look at this move. This is actually a 4% move if you measure from the bottom. So that's the wrong technical right here. So it's a 4% move from QQQ. This is the leverage ETF 3X for QQQ, meaning it's whatever move it does is a 3 times of it. So QQQ moved about 4%, which is really big for QQQ and SPY. And this is the 3X of it. So we had a 4% move from the bottom to top, and we're very extended on the hourly chart, and the 4 hours is starting to get overbought as well. So what I'm looking for would be a 4-hour higher low, meaning, let me do that drawing so you guys can see more clear. We're looking for a 4-hour higher low, meaning that we have to make a higher low. So it will be like this. So the next candle has to be lower than the previous candle. So it has to be lower than this one. That'll be a higher low. So if what we want to see is bulls buying up the dip, and what I'm looking for will be a 5-minute or 15-minute oversold. Once we get that 5-minute and or 15-minute oversold, I want to see bulls aggressively buying that dip. And if that's the case, I'm going to be back in the market as well, and I'm going to be riding the next wave up with that higher low set. And if we do get that set, and what we have to do is break above the previous high candle for that for our uptrend to be set. So right now we're in a neutral trend. We're not in a downtrend. This is a 4-hour downtrend. But then we broke above this level, so now we're in a neutral trend because we haven't changed the trend to the 4-hour uptrend. So once we get this lower high and then we break above this previous high, then right here we'll have a 4-hour uptrend. I'm also looking at for the daily time frame as well. It's the exact same setup. Daily has been just shot up straight, and so take it one day at a time. And so Monday, if this happens, this is very likely going to happen Monday. We could either gap up. So we have to look at the futures and Sundays. If we gap up, all the bulls will likely be taking profits, and so we'll get the higher low right after that gap up. And then when we get the higher low, bulls will be starting to ride the dip. I'll be probably getting back in as well. Set a stop loss under the pivot, and then we go straight. We go up. We ride the next move up, or we just open flat, and then get that dip as well again to set the hourly higher low, and go from there. So Monday will be buying the dip day, depending on the price action. And I would want to be back in the position as well. And hopefully we'll get an update. I'll give you guys an update tomorrow, see if how the futures market look as well. And I'll see you guys around.